Well, how's it going, everybody? I hope you're all doing well. My name is Mike the CPA. Welcome back to Money and Life TV. On this channel, we're all about teaching people finances, investing, taxes, and more. And today's video is going to be pretty casual, guys. It's going to be nothing too technical. I've had some technical videos I've been throwing at you the last 2 weeks, probably giving you all headaches. So we're going to keep it on the light side. And this is a really fun topic that I've been wanting to discuss with you, and that I've really never shared with you. And this is all about my dividend growth history for my wife and I, as where we started and kind of how we grew our dividend income over time. And that's what I really wanted to share with you, and just kind of share some of the story of how we got there. Now, this is not one of those videos where I'm here to brag or anything like that. It's just to show you how much you can accomplish over a few years and the power of compounding interest, of how you can get that working for you. And it's quite exciting once you see your passive income growing year after year after year. It kind of gets exciting, and it just keeps snowballing from there. Imagine you're just like a debt snowball, but imagine it's your dividend income snowball that keeps growing and growing and throwing off passive income for you every year. All right, so what I'm going to be sharing with you guys here on screen is I started tracking, or I should say, we started investing really serious back in 2014, I think is when we started, because my wife and I, we got married in 2012. We bought a home at the beginning of 2013. Didn't really have any money to invest at that point because it was all going into this house you see behind me. Then around 2014, that's when I really started to invest. When I first started off investing, I was doing the whole day trading thing, or swing trading. Wasn't really working out for me, guys. I just got to be honest with you. Really wasn't working out for me. I was really stressed, trying to constantly be checking the markets, trying to time when to buy, when to sell. Finally, I just got out of that. I just decided that at this moment in my life, that method of investing wasn't for me. And then I started to build a long-term portfolio mindset of, okay, no more trading. I'm going to start doing things long-term. And because what I realized is that my best investments were the ones I held on to. I was picking good investments. I just was either selling them too soon or just messing it up one way or the other. So I started investing long-term, and I started getting really good results with my investment picks because I felt like I had a good handle on that. But so I started going down the path of dividend investing, because the idea of passive income coming in every month was exciting to me, and replacing my eventually building a passive income that could help us retire. On screen here, you'll see that in 2014 we started investing. Now, I started off with just a normal taxable brokerage account, and if you don't know the differences between a brokerage account, Roth IRA accounts, and things like that, I have this video, which I'm going to link down in the description section below, that discusses the main differences between accounts that I recommend you guys check out. But that's where our investing journey started. Okay, and so at that point in time, I wasn't investing consistently. Like, I wasn't, putting a certain amount in every month and buying and whatnot. It was kind of irregular. So, but nonetheless, in 2014, our total dividend income was about $420. Nothing to brag about, right? But you can see over the years, though, from 2015, 16, 17, 18, it has been growing and growing and growing. And really, between 2014 and 2015, that's when we started investing consistent amounts, almost every single month, and doing it year after year after year, and just having like a routine strategy. Somewhere in between 2014 and 2015, I finally formed a strategy and really just taken things from there and moved it to what it is today. As you can see, we didn't really open up the Roth. So Roth IRA, that's when I first opened my Roth IRA. I opened it in 2015, and it had hardly any dividend income at all that first year, because that was the first year I opened to it. As you guys know, now, this is in 2015 is when I first maxed out a Roth IRA. It wasn't until 2016, that's when we opened up one for my wife. So then both my wife and I had Roth IRAs. We were maxing them out and then contributing a set amount of money to our brokerage account every single year. And just by constantly putting money in that account, saving money from our paycheck, budgeting, and then putting it into those investment accounts, that's how we got this thing rolling. And so now, as of last year in 2018, if between our taxable brokerage account and our two Roth IRA accounts, I mean, we brought in over $3,500 in dividends. Because I like to think of this as one collective unit. Now, I'm going to be honest with you guys, I don't touch this money. Like this money, I pretend I don't even have it. I just keep reinvesting it again and again and again. Now, I don't always invest every month. I try to, but as you guys know, if you follow my videos, I'm a CPA. So during tax time, which is just ended, I'm filming this on April 17th of 2019. I was, I'm so involved with work, like I don't feel comfortable just randomly picking investments. I like to take a moment and decide and be really, what's the word, intentional about what kind of investment I want to pick. So between January and April, I haven't done much investing. But through the rest of the year, though, I'll be pretty much investing every single month. So I just wanted to show you this, though, as you can see that if you keep investing and keep growing your investments and building your portfolio in these different accounts that you can have, that you can invest in for your future, you can get some serious income growth. And you can see down here, this row shows the change in investments or the change in dividend income over each year. So, for example, like from the difference between what we made in 18 and 2017 is quite substantial. I mean, we made $1,200 more versus when we first started. The difference in income and dividend income wasn't that large. It was only like $400, $500. But this is the type of thing, guys, I really just want to stress that you can do for yourself. Blue chip companies, which I want to talk to you guys about that right now just for a second. And this is what it can look like, okay? So I've started tracking this as of last year, and I had to rebuild the history of 14, 15, and 16. But now going forward, I want to track this every single year. So this is what it looks like in a sense, okay? This is, ignore this column where it says description. Just ignore that because it's not really accurate. But just by getting this going, you can see these dates. Every date here, it shows a dividend payout. That's when money is coming into these different accounts. And so this is what it looks like when you have 3 accounts working simultaneously all at once. Over time, you can see it's just kind of like a stream of money coming into your account year after year after year, or quarter after quarter. Usually it's every quarter. Now, just to give you guys some examples, as I'm not going to go into like all of the details of what stocks I own, but like I'll just give you guys some examples. So like Procter & Gamble, we have McDonald's, Kimberly-Clark, Clorox. I have some REITs, which are real estate investment trusts that pay higher yields, like 5 to 6%. Some of them own commercial properties that are entertainment related, like Topgolf and things like that, or movie theaters. The REITs we have, they own like healthcare institutions. So like a lot of these healthcare facilities, there are real estate investment trusts that own the buildings where these doctors' offices are established, or these like retirement or nursing homes are established, where we collect dividend income from that as well. So there's all different kinds of REITs out there that pay pretty high yields, but are still relatively safe to invest in. And also have REITs that house servers for like cloud accounting. Because there's so many companies out there that need space or real estate to store their computer servers, because so much of business and e-commerce and stuff is done online. So there's REITs for that as well. So I own several different REITs. And then I also own a small portion of bonds. We own, some corporate bonds, some treasury bonds, not a lot, honestly. It's probably like 5% or less of our portfolio if I were to think about it. I don't think it's greater than that, but I just wanted to show you guys this real quick because I've never shared this before with anybody, and I just want to show you just so what you can do for yourself if you are somebody who wants to invest for dividends, because it's pretty exciting to see this waterfall of income coming into your account and growing every single year. Now, as a CPA, I see a lot. I work with a lot of wealthy individuals, and I see tax returns and incomes of all different types. But it's quite amazing, at least to me it is if you yeah, I wish I could show you guys, so obviously I can't for confidentiality reasons, but like I've seen like tax returns where I'm working on it and they have dividend income of 80,000, over 100 or over 100,000, and every year it just goes up. Like the dividend income just grows and they do nothing. They're not even investing more in it at this point. But the dividend income keeps compounding because these companies usually increase their dividends over time. So you're just watching their passive income go up every single year. And I've been doing this one person's tax return now, and for the past 3 years, their dividend income has increased by about $5,000 every single year. And they haven't done anything different. It just keeps going up. It keeps growing. And so it's really exciting and promising, or of what it can, what can happen for you when you're investing this way. So just real quickly, as I wrap this up, I don't want to make this video too long and I don't want to ramble on too much, but I just want to let you know that this is a strategy. It's really simple to implement. And, so many people, they get what I see happen to them. And this used to be the case for me. I used to get so wrapped up in every little detail of, oh my gosh, should I buy the stock today or should I buy it tomorrow? Oh my gosh, should I buy the stock when it's 30 cents down or should I wait till it's $2 down? Trying to time the market perfectly. It's, if you can, when I research stocks, I definitely, before I buy, I do look at the technical analysis. I look at the fundamentals. I look at the financials. I think of the economy as a whole. If that company has staying power within the current economy. But sometimes I think we overthink it, guys. I think we overthink this. We stress out about the little things when what I want to encourage you to think about is the bigger picture. The little things are important. I'm not saying they're not, but what I see happen out there is that people, they invest maybe a few times, maybe they invest $10,000, $20,000, and then they stop investing altogether. But what I want to share with you is think of the big picture. Instead of thinking about how am I going to invest $100, how am I going to invest $1,000, $10,000? No. It's good to think about that, but think bigger. Okay, I would encourage you all to think bigger because I had to learn to do this for myself because it's scary. Investing's super scary. Even today, it's still kind of scary. But since I've been doing it now consistently since 2014, it's gotten easier and easier and easier. But the bigger picture here I want to share with you guys is that the little stuff is important, but the main thing is consistency. Is instead of thinking, like I said, about how do you invest $10,000, think about how am I going to invest this set amount of money consistently over my lifetime? And don't just get fixated on a certain dollar amount. Think of consistently accumulating assets because that's what needs to be done. If in order for you to have a substantial dividend income, you're not going to do it with 10,000. You're not going to do it with even 100,000. To be honest, it takes hundreds of thousands to get a substantial dividend income coming in. And even, if to clear a couple million, to grow a dividend income of 80 to 100,000 or more, you're talking about a portfolio worth about over a couple $1 million. Realistically, if you look at the math, that's what it might take to get there. But so don't get hung up on the small stuff. Think about the main thing to make your account grow and your dividend income grow is to invest consistently over time and keep putting money in. And guys, this stuff, when you really boil it down, it's not that hard. If, I'm going to start making videos on investment analysis because I've gotten so many requests to do it, and I'm no investing expert, so definitely do all of your own homework, come up with your own strategy on all this stuff. But I can teach you some of the things I've learned over the years and what works for me. So I like dividend investing because it's so simple. Because I don't want to spend my time looking at stocks all day. I like to spend my time with doing other stuff, spending time with family, doing other activities that I enjoy, like making these YouTube videos. To me, that's much more meaningful than trying to time the market perfectly. Maybe someday I'll look at doing trading again, but not right now. But the main thing here is really to just get started and invest consistently. So, when it comes to my investments, I just mentioned some of them is like Clorox and McDonald's. It's pretty common sense. Like if to really build a nice dividend portfolio, if you can identify the blue chips, like the big companies that have been around forever, and if you find a company you like that still around. So like, let's say Clorox, for example. Clorox is a great example because I don't see Clorox going away anytime soon. No matter how much technology changes, we still need their cleaning products. And as the population grows, the population still needs their cleaning products. Hospitals use it. It's used everywhere, everywhere. And it's simple. It's probably boring to most people, but they pay dividends and they continue to increase their dividend. And a lot of these companies like Kimberly-Clark, McDonald's, Procter & Gamble, they've been appreciated in value as well. So not only do you get the dividend income, but you get the capital appreciation as well in these companies. And same with some of the REITs. If you choose your investments carefully, not only do you get income, but you get appreciation as well. And so that's the beauty of it. It's not that hard. The hardest part is probably, for most people, is having the money to invest. But once you figure that part out, picking the investments, it doesn't take much time. So like, for example, I bought Pepsi early this year. I think in January, February, I bought Pepsi. I'm already at 15%. It's doing great. And it pays a nice dividend, and they're known for increasing their dividend payout over time. So every year, not only am I contributing more to these accounts every single year, but the shares themselves are usually increasing the dividend payout every year. So what should happen is our dividend income should keep going up. So right now in 2019, this is current. I've updated this as 4/17/2019. Our current dividend payout for the year has been about $1,200. By year end, I would think, I'm guessing here because I don't know for sure, but I would think this would be about $4,000 to $4,500 or somewhere in there, or maybe even close to $5,000. Especially since I'm going to start investing some of the money I've been building up over tax season. Now I'm ready to look at investments and choose some and go from there. So I just wanted to share this with you guys of the compounding magic in action. And this is kind of what it looks like, and it's really exciting. And what's great about this, the income from the Roth IRAs here is it's all tax-free. It's completely tax-free. I don't pay any tax on this. So really, the only dividends we pay tax on are on this brokerage line. We pay tax there. And most of these, like 70% of this dividend income is qualified. So I pay at a lower tax rate on this income. So many advantages to investing this way, guys. It's really simple. It doesn't take much time. And you can keep watching your passive income grow year after year after year. And that's what I like. And you know what else I like? I like when you guys crush that like button. So I just want to thank you in advance for doing that. And hopefully you've enjoyed this video. I just want to share that with you and just to give you some perspective of how things are looking. So if you break down the numbers, that's like $350 to $400 a month roughly in dividends is where things are at right now, and we should continue to go up from there every year. A couple more years, and it hopefully should cover our mortgage. I'm excited about this, guys, and I just wanted to share that with you, and so you can kind of see how this kind of investing strategy can grow your income, and because you don't have to worry about market fluctuations as much when you constantly have an income coming in, and that's the idea behind dividend investing. All right, guys. Well, like I said, if you liked the video, make sure you drop a like before you leave. It really helps the channel out and helps get this information out to more and more people. And if you're brand new to this channel, I just want to say welcome. Here on Money in Life TV, we're all about helping you become fiscally fit as we teach finances, investing, taxes, and life on a regular basis. Let me know what you think about all this stuff, guys, in the comment section down below. That's where I'll see you. Can't wait to read what you guys have to say about this stuff and what's going on in your own portfolio and how you've been growing your dividend income over time. There's so many possibilities and so much you can do, and it's so easy to do this. It's so simple. And I'll see you guys in the next video. Have a great week, everybody. Peace.